Hi everyone, welcome to Adjust with T, where we help students understand accounting adjustments clearly and confidently. If you are new here, welcome and don't forget to subscribe. If you're a returning subscriber, welcome and thank you for subscribing. So last week we looked into details as to what accounting adjustments are and why they are important. So in this video, we will be looking at one of the accounting adjustments concept called accrued expenses. So accrued expenses are those expenses or costs that the company has incurred but not yet paid or received an invoice for. So the company has enjoyed the economic benefits on these expenses, but they still have not paid them at year end. So one will ask me, but T, when do we record accrued expenses? So we record them in the period in which they occur and not necessarily when they are paid. We record them in the financial statements as current liabilities in the balance sheet and under operating expenses in the income statement. So we'll look into an example of how we can go about handling one of those accrued expenses. So here I've got a question which says, or an example which says, the information relates to the accounting records of Maruping dealers for the year ended 31 December 2024. Take the information into account and complete the income statement and balance sheet. So information A, we gave an Maruping dealers trial balance for the year ended 31 August 2024. In the trial balance, we've got the telephone of 7,490 and the creditors control of 51,577. Then we have adjustment information B, where we are told that the telephone account for August 2024 has been received but not yet paid. And then they gave us an amount of 404. So how you'll go about recording this in the income statement and the balance sheet, it will be as follows. So you will have Maruping dealers, then you will have your income statement, right? Then under operating expenses, you will have your telephone, which in the trial balance they've given it to us as 7,490, but because we are told that because in additional information B, we are told that the telephone account has been received but it has not yet been paid, which means that we've already used the telephone but we've not paid for it for the amount of 405. So we need to add this 405 to the telephone amount that we've already got in the trial balance. So if you add the two, 7,490 plus 405, then you will have your telephone as 7,895 in the income statement. So in your balance sheet now, you will record it under current liabilities, under trade and other payables, right? Because you are given the amount for creditors control, they've given us creditors control as 51,577. So we'll start with the creditors control as 51,577. 577. Then we add, because we know that we still have a liability to pay for the 405 that we have not yet paid for the telephone. So that will increase our debtors, our creditors, I mean. So that will increase our creditors. So we'll be owing more. So it's 5,577 plus 405, which means now our creditors control will be 54,982. I hope you understood our accrued expense concept for today. If you have any more questions, you can drop them in the comment section below. I will attend to your questions. Don't forget to like, subscribe, and share with anyone that you feel this information will help them. And I will see you on my next one. Thank you. Bye.